April Fool's is typically the day of jokes.
I'm off a couple weeks. I gotta wait.
I wouldn't call you off, but what's happening with the Department of Education
Okay.
and people's student loans? More importantly, how does this affect people?
All right. I'm happy to bring a little bit of stability, calm to this conversation.
We'll be the judge of that.
Yes, we have all heard that they're getting rid of the Department of Education. But one thing I've noticed continually in all this reporting is a lack of, well, we're getting rid of the Department of Education and we're going to shoot it off into space like one of Elon Musk's SpaceX machines, right? And then what? And then nothing is going to be left. And then there's really no conversation about, well, what? Then what's left? What happens to all the normal functions of the Department of Education? Some of which I guess are excess and not working well. And whatever. And then there are things that are really needed and necessary. What's going to happen with those elements of the Department of Education? Are they going away? Am I going to be able to take out student loans this spring for next year's school year? I'm sure that's a question that's bugging all of you. What's going to happen? Okay. So I will update you and tell you, as many of you have heard, 50% of the current Department of Education has been offered or either let go or offered early retirement, and 50% as of this Friday will no longer be employed per se or actively employed by the Department of Education.
Right. There were like 1,300 layoffs and another 800 or 600 took the buyout.
Took the early retirement buyout. Yeah. Exactly. And so what's left, and it's almost like a little joke. Okay, so they didn't get rid of 100% of the people. They've left 50% of the people, arguably, to do what? Okay, so I am here to tell you what else is going to be. Not to say that the remaining 50% isn't going to be let go at some point or dismantled at some point. But the most important thing for everybody listening is that the actual substantive actions of the Department of Education that we are all concerned with may not be executed in the future by the Department of Education, but may in fact be executed by a different branch of government, like the Department of Treasury, for example. Not sure what's going to happen. So what's going to be left?
The SBA, right?
The Small Business Association. That's right. These are two that have been thrown out there as possibilities to execute the functions of the Department of Education that we're all looking to now. Are they going to go away? Or are they going to stay? So from what I understand as of now, the Department of Education is going to continue to deliver on all statutory programs that fall under the agency's purview, including student loans, Pell Grants, funding for special needs students, and competitive grant making. All of the divisions currently impacted by the reduction will be there. Those departments are going to be reorganized, and it is mostly about functionality and actually having ideal functionality, which, well, I can share in my own expert opinion, having worked on or with or being forced to work with the Department of Education for years now. It has been really inefficient. And so a lot of the articles now are talking about, if we have this great reduction, it's going to be that much slower and take that much longer. Let me tell you what, folks, it's been pretty slow and pretty inefficient for years now, leading us to this moment. So let's not just conclude that it's going to be less efficient if we cut back on some of the inefficiency.
Yeah, I mean, there has to be some sort of disruption.
Yes.
Because when you cut people by 50%, there just has to be. But I don't know if that means there's going to be a doubling in efficiency. And just look at what happened 2 years ago when they rolled out the updated FAFSA, when they rewrote the
streamlined it.
Yeah, and that was with a fully staffed Department of Education, and that took them 2 years.
And it was abysmal.
It took them 2 years to get it right. And now maybe, since it seems to be running smoothly, maybe it requires fewer hands,
right,
and Band-Aids and rubber bands, whatever, to prop it up.
Right.
Who knows?
And then the last bit in terms, so yes, you'll be able to get the student loans, funding, yes, things that are currently available, you'll be able to apply for FAFSA, apply for aid. Those things are going to stay intact for now. And from what I understand, that is the intention. Who's going to be administering those things? That remains to be seen. And then the only other comment I have, as of now, you're only, in terms of loans, you're only able, if you're going to try to consolidate your loans or change your repayment plan for your loans, if your loans are currently due, that remains, that is, seems to be the subject of where some of the change can happen.
We don't know yet.
We don't know yet.
Yeah.
But specifically right now, no one is able to successfully enter into an income-based repayment plan. Nobody is able to currently go online and consolidate their loans. You can do a paper consolidation. Just keep in mind, the processing time for that may be considerable. And as to public service loan forgiveness, that's been the other question that people have had. Is that going away? Right now, it seems that it is not going to be affected, except in terms of the entirety of the program, public service loan forgiveness, wherein you, if you're a eligible public servant and have parent loans or student loans, you're able to seek a forgiveness on those loans after 120 successful, payments under an income-based repayment plan. And anyway, what could change under that is the eligible employers. So they're going to potentially shrink the group of people that would be eligible for public service loan forgiveness.
All right, can I drill down on some of the stuff that I think is probably going to affect people who are watching or listening to this on our podcast or whatever. So we've got class of 2025 kids who are hearing back from colleges. They're receiving offers of aid. I want to point out one thing, though, before I ask you the question. A lot of people receive aid that doesn't come from the government. That comes from the college themselves. Institutional aid. It has nothing to do with the FAFSA. It has everything to do with other financial aid applications, usually the CSS profile. So no changes to that at all. Okay. So the vast majority of money that gets delivered out there for non-low income families is either merit aid, which again has nothing to do with what we're talking about today or what Trump is talking about, and institutional need-based aid, which families with higher incomes typically qualify for compared to federal aid, which higher income families don't get. So more aid comes from non-federal sources. So I think that's just an important thing because I don't see that being covered in any of the articles.
You're right.
First of all, in terms of the timeline now for class of 2025 kids, they're going to hear back from the colleges with their offers, which may contain a federal aid component. Could be loans, could be Pell Grant if you're low income. And then so assuming that doesn't get delayed, which it could. By the way, if it does get delayed, every college is going to know that, and they will probably play ball with you and extend the housing deposit deadlines, which are typically May 1st. Okay. Now let's say that the time to put in loans for families who are looking to borrow usually opens in May.
April.
But most families don't do that until the end of the summer.
That's correct.
Right?
Yep.
So what's your advice for people who at least either they know they're going to need to borrow and they'll know, they should know what college will cost them sometime before April 1st. That's when all the financial aid offers and scholarship offers should come in. There might be some negotiating, but they'll basically know. What's your best advice for people at that point who either know they're going to need to borrow, but they're not sure of the amount, or they're not sure if they're going to borrow, but maybe it would be smart of them to preserve that right?
Right. Okay. So my advice would be unequivocally get your paperwork in, secure your loans either way. So let me explain how the actual loan application works so that there are three options in terms of specifying what kind of funding you want, you as the parent. The student can borrow or will receive $5,500 in their own name to borrow. That's not what I'm talking about now. I'm talking about the parent who borrows either the rest of what's owed for an entire year, meaning you, as a parent, you can borrow cost up to the cost of attendance as determined by the school, meaning room, board, tuition, and fees, all in. So here are the three options.
Let me interrupt you first, just to back it up. So first you have to know where you're going to college.
You have to
right?
know
'Cause
which school. You need to specify in that loan application
Right.
the school. Because the minute you make this application, the parent loan application, and submit it, your school gets immediate notification of the loan, of
Okay.
what you're planning to do, so they know immediately.
So timeline wise, that's typically middle of April.
Yes.
Could be earlier if you already know. But
Knowing where the school, but the availability of the loan application won't be until April, mid-April typically.
But in your case, you need to know which you can't apply to more than one school
No.
for loans.
Nope, you cannot.
Okay.
And I just want to, 3 ways in the loan that you have the option of which in terms of making your application. One, you can specify a dollar amount. I want to borrow $30,000 for the 25-26 school year, or I want to borrow $30,000 for fall 25. Okay, so there are those options. That's one. Option 2, I want to borrow money, but I will let my school know later how much. That's an option. So you've preserved your right.
So how do you get approved? You don't get approved for an amount when you do that?
No, your credit gets approved or disapproved. See, and this is the unique thing about parent loans. It is not the amount that you're borrowing that becomes subject to any debt to income ratio analysis. It is simply a yes or no proposition. Your credit is worthy or not worthy of the parent loan. And after that, if it's a yes, whatever it is you need to borrow up to the cost of attendance as determined by the school, that's all fine.
All right. So now we need to back up again before you get to that third option. So we're talking about parent loans. You're
Yes.
talking about parent loans. You're not talking about student loans.
No.
Okay. So by virtue of filing a FAFSA, you're entitled to, as a freshman, $5,500.
Yes.
And then more as you progress.
Yes.
If you also qualify for need-based aid, some of that $5,500 will be a subsidized direct loan.
Yes.
Which means the government pays the interest while you're in college.
Right.
6 months after. For most people watching this, the majority or 100% will be the unsubsidized direct loan, which interest accrues right away.
Interest accrues right away.
But that's all you can borrow, $5,500.
That's right.
So if you're stuck thinking, okay, college is $95,000, we can pay out of pocket, $30,000. We can. A lot of colleges offer payment plans. You can spread it out over 10 months.
Yeah.
And then you might be stuck with, okay, well, where am I going to come up with the rest? Mom, dad, grandma, grandpa,
Right.
rob a bank.
You got 55,000 left in your little back pattern.
Yeah.
Right.
Okay. So we've already talked about you can borrow a specific amount.
Yep.
You can say I want to be considered for a loan, but I don't yet know the amount.
Right.
I didn't know that.
Yep.
And then number 3.
Number 3 is specifically, and this is the language, I want to borrow up to the cost of attendance as determined by the school, which is
less any other aid.
Less any other aid the student is getting, meaning that student loan, any other merit aid that the student may get, et cetera, and so forth. Whatever else is owed, essentially, is what that last category is.
Not including any outside scholarships from other places.
That's right.
Just from the school itself.
Yes.
So I want to borrow a specific amount, because I know the dollars already.
Yes.
I don't know the amount, number 2.
But I'll let you know.
But I'll let you know. Right. That seems like the obvious one to do at this point.
If you really don't know. Otherwise, the third one is a great option, because I just want to go ahead.
Well, no, we don't know. A lot of colleges don't even publish the cost of attendance for the next year anyway.
Right.
So you should look at the cost of attendance for this year, add another 3%, just to be safe. This is all published on these colleges' websites. Yeah. But they don't. Most of them aren't posted yet.
Which is why that second option, I find when families try to just based on my experience, when they try to figure out dollar for dollar, exactly what it should be, and then they make the loan for that amount. Sometimes I see, and then they forget about it for the year. Sometimes I see those families run into problems with, one, they underestimated really how much, oh, look, my child increased they made a fancier meal plan for themselves. That's an extra $500. That's all of a sudden not included because you were so specific about trying to figure out exactly, what the price would be, but there are always extra little fees. What I don't want to happen, this is why you really haven't heard about it, and I don't really recommend this, and I'll explain why. If you're wrong about those numbers and you just go ahead and forget about it, and you think it's all good, and then you have like an outstanding bill, it could be for nothing, for $500 in the course of a $95,000 year. That could create a hold on your student's account. And then when your student goes to register for classes for the next semester, there's a hold on the account, so they can't quite register yet. And so then they don't get the classes they need. That can be an issue. So
And this could be, okay, so that's a great point. In a normal year, this year coming up, it could be very tumultuous because behind the scenes, we're just talking about you, the family, but behind the scenes, the financial aid officers at these colleges are going to be juggling a lot of plates, and they're going to be very frustrated because there's definitely fewer admin people at the Department of Ed to help them. So you got to get out in front of this because there have to be delays and mistakes.
Yeah.
I'd be shocked if this was a smooth transition. It sounds to me, I agree with you that it was a necessary thing to do just because there's so much bloat in all these agencies, but you've seen the inefficiencies at the Department of Education.
Yeah, not just bloat, really just not working the way it should be. How many years I can tell you I've seen a little pulsing blue dot on my screen for the Department of Education. This
for the FAFSA or something?
Yeah, just come on, it's 2025. One last comment about the loans. Sorry.
Yeah.
My other reason for saying, okay, maybe that middle option isn't great. With any one of the three choices in the parent loan, you always have an option, not forever, but you have an option to go back into an already submitted loan application, okay? And not to redo the whole thing, but just simply update the amount you're borrowing or update that. So you don't need to do that middle no man's land. You can actually specify or say, I want to do the whole kit and caboodle. And then all of a sudden you find out weeks later, you're like, oops, I wanted to really do this or that. You can go back into your already submitted loan application and just update that part, how much you want to borrow. So
there's no reason not to get out in front of this now, and that's what we're urging everyone to do who is contemplating borrowing. Either they know or they are unsure whether they're going to borrow, but that's something we're targeting as a potential major source of anxiety and delay. So you'd be very smart to get out in front of this over the next month and a half so that you can make your life easier. When you were saying before about the people who keep revising their amounts, and I know you've clients in the past who do this, it gets, they're tinkering around with $1,000 here and there, which is honestly, there's better things to do, not just for your time, but there's better things in life for everyone to do. So when in doubt, borrow a couple $1,000s more, and if it turns out to be too much, just pay it back. Just that'll
it wasn't what you exactly.
Yeah, it's not like there's a prepayment penalty or something like that.
Right.
The money is there. It's very easy to get. The credit check is a joke for most people. I've seen Pearl get some people approved who, in a million years, you would, if you were privately thinking about lending money to them, you would never want to do that based on their credit and other historical things. So it's going to be a bumpy ride. Got to strap in, but get out in front of it. Get proactive.
Right. And in terms of those who are trying to crunch the number, figure out, to beat the school and get it right and get the dollar figure exact, who frequently that fails. There's also an origination fee on the parent loan of 1%. Like you have to, or actually 4%. So that's another figure that you may not be accounting for when you're nickeling and diming and trying to figure out that precise figure. You may be off anyway just because you're not realizing there's an origination fee on these parent loans. So,
which may be why these never get cut from by Congress, because it's a moneymaker. Well, some people say it's not, but it's a well.
Well, where is that 4% going?
Yeah. What is the current? Do you know off the top of your head what the current interest rate is, and what do you anticipate in
Yes.
July?
Okay, so the
Parent loan.
the interest rate for the student and the parent loan is set every July for the year that then follows. However, we usually catch notice of what the rates will be in April, Mayish. So for this current school year that we are in, 24-25, the parent interest rate is 9%.
Which, by the way, that may
is,
sound high, right?
however,
but it's
that is-
unsecured.
It's unsecured, true.
Yeah,
It's
it's not a mortgage.
9%. Student rate this year is 6%. Historically, as in the recent history, for the past 10 years, I can tell you 9% for the parent loan is the highest it's been in 10 years, at least.
So you're predicting it's dropping?
I'm not making a prediction because things are super uncertain at
Well,
the moment. The market is all over the place. I have no idea what they're going to do. So I think we need to see a couple of more news articles come out on the topic before I can make any kind
it's
of
based on
judgment
the,
on the interest rate.
Yeah, it's based on the 10-year Treasury bond, and it's not a rate that's necessarily pulled out of left field. It's actually based on the market,
Right.
which you can argue is manipulated also, but
Right.
I don't think it's dropping.
I don't think it's dropping either. And what the trend has actually been, let's say 10 years ago, it was at the parent rate was like at 5%, and then it went up to 6%, and 6.5%.
Yeah.
A year later, it was 7%. That's what the trend has been. Last year it was 8%. Now we're 9%. We'll see.
Yeah. So which is on one hand, a lot of people think that's great. It helps helps people come up with money for college.
Right.
On the other hand, a lot of people are enslaved by their debts, which is why we have a separate business which helps people get out of those student loans.
Yeah.
That's yesterday's debt.
Or make them more manageable.
Right. The other bigger picture argument, which I first read about years ago by then Secretary of Education William Bennett, I think this is going back to the Bush years, is that this easy availability of money is what's driving up college costs. And that is a reason why this is going to be looked at again, I think, by the Trump administration. But Congress has to be involved, it has to be passed in Congress to make money less accessible for people, which then gives colleges the incentive to not jack up prices by 2 to 3% or more, more than the cost of living, which historically it's been higher. The rate of college tuition increases historically has been higher than cost of living, cost of medical care, virtually every other index. This past year, it seems like the tuition increases weren't as great meaning as large as previous years, but still every year they go up. And I think that's why a lot of colleges are reluctant to publish their cost of attendance until after for the next year, until after all the housing deposits come in in May 1st on a typical year. So anyway, all right, good stuff. If you have any questions or comments, wherever you're watching this, pop them in the comment section, whether you're watching this on our Facebook page or the YouTube channel. We'll post this everywhere else, LinkedIn, and on our podcast, The College Admissions Edge. Thanks for watching. Please subscribe and like and rate us so that we can continue to give you this information, which there's no way you're getting this information from your guidance counselor or anyone else at school, because it's sort of cutting edge and it's a little politically incorrect, a little bit of a third rail that we touch every once in a while here. But I hope you find it valuable. Thanks for watching, Pearl. Nice job as usual.
Thank you. Same with you.
Not just the coffee.
Thanks.
But the explanation.
Have a great St. Patty's Day and a great week.
Yeah, and enjoy March Madness. We have a couple teams to root for. We've got St. John's, which is where I went to law school.
Where we met.
We've got, and they won the Big East tournament yesterday. And Michigan, where one of our kids goes, they won their tournament, the Big Ten tournament, yesterday.
So conflicted.
Cornell lost in the Ivy League championship. That's another one of our kids goes there, but they lost to Yale. And Wesleyan, where I went, was the number 1 seed for the D3.
Oh.
Yeah.
Excuse me.
Yeah. I know. Bench warmer, D3, right here. So enjoy the week.